Hi, this is Zach Meir from Master Investor with a look at some bulletin board hero stocks on Thursday, May the 14th. Starting off with Alba Mineral Resources, where it looks as though there's been a decent revival here. What's positive on the technical side is the way that support on Wednesday was at the 200-day moving average, 0.55 pence. And normally when you see a stock on market recover the 200-day line in that way, we are in for a sustained positive trend change. Possible target here 1.4, 1.5 pence, which would be the top of the April rising trend channel, and the stop loss really an end of day close back below, say 0.5 pence to give the share some leeway. Double bounce off RSI 50 over the course of May today, which is giving the shares positive momentum, as is the rising 50-day average at 0.43 pence. So looking more encouraging there at Alba. Europa Oil and Gas also in the spotlight on the technical front, positive in a positive fashion. Again, similar setup to Alba in the sense that the low of the day was almost exactly on the 200-day moving average, in this case at 7.12 pence. And while we hold above that, we should see progress within this rising trend channel that has been on the daily chart since November. That's got its resistance line heading as high as 13 pence, and that would be the target over the next 4 to 6 weeks. Stop loss probably back below the 50-day average, 6.87 pence. Again, giving the shares some wiggle room, decent volume spike, and decent extended RSI support, higher support points as well over recent months there for Europa. LGO Energy finally back in business, or it looks as though it's back in business on the technical front. We've had this sort of pullback from basically the autumn, 5 pence plus, which was rather disappointing, and then this extended consolidation here. The highlight of Wednesday's price action, really the way that we closed well above the 50-day moving average at 2.55 pence. Stop loss and also likely support is towards the floor of this rising February price channel at 2.5 pence. And while we remain above that, we could head as high as the top of this January rising trend channel, and the 200-day moving average at 3.5 pence or 3.55 pence. Could be much more on offer, but at least that's the initial target over the next month or so. Just couldn't resist looking at New World Oil and Gas. Technicals here to look out for really are the way that the 50-day moving average and 20-day moving averages have crossed up for a golden cross buy signal. Yesterday's support was on the 10-day moving average, which is sort of a big plus point there on the technical front, shows strength. Daily disappointment really is that we didn't close above the 200-day moving average at 0.29 pence, and really one would probably want to see that cleared before regarding the shares as being fully back in bull mode. The other positive, the bounce off RSI 50 to leave the RSI at 59, which is a buy signal and a leading indicator in its own right. The ideal scenario obviously is that we then whiplash back up towards the top of this range, 0.8 pence plus, but at this stage the message is definitely wait on the 200-day line to be broken before getting too enthusiastic about New World Oil and Gas in the near term. Rare Earth Minerals is next. Here we can see that we're in the aftermath of a rebound off the 50-day moving average at 1.03 pence. Rising trend channel here basically since November, but the main sort of technical indicator here is that we remain above the 200-day moving average. That's at 1.13 pence, and especially while we're above that, we can still make it up to the top of the rising trend channel from November, 1.4 pence over the next few weeks. Finishing off with UK Oil and Gas, obviously a stock which is rarely out of the news, and understandably so. Just the current configuration here, basically a rising trend channel from April. We've obviously had this gap to the upside. It remains unfilled, and that gives the shares a very positive spin from a technical perspective. Floor of the channel 2.47 pence. And that's also the area of the 20-day moving average and the notional end-of-day close stop loss. And above that, we're looking for at least 4 pence initially, which would be the top of this channel. That channel could actually be rather wider. It could be up to 6 pence, but looking for 4 pence in the first instance. That's it from me. More updates on Twitter at Zach's Traders Cafe.